providers. So a warm welcome to you. My name is Michele Fourie. I am a senior specialist in the AML CFT Supervision Department of the Financial Sector Conduct Authority. And I'm joined by one of my colleagues today who is an expert in crypto assets. And I'll hand over to him to introduce himself.
No, thank you, Michele. And once again, warm welcome to all of the viewers. My name is Mohammed Jahed. I am currently the manager for crypto asset service providers in the AML CFT division. Thanks, Michele.
Thank you, Mo. So we have a jam-packed program. In fact, the program is so jam-packed, we decided to make it a little bit more digestible and split it into 5 parts so we can cover all the information that we want you to know, but not overwhelm you at the same time. So this is part 1 of a 5-part webinar, and each of these webinar sections will be published on our official website on the YouTube channel. And we really encourage you to watch all 5 parts and watch it as many times as you need to. Share it. Sharing is caring. And watch it as many times as you like, because that is how we learn. So I would like to start, Mo, because we have a lot of information that we need to go through. And in this first part, we are going to deal with a bit of regulatory framework background, just to put everyone on the same page. How did this regulation of crypto assets really come from? How did it evolve? And we also want to talk about then the registration with the Financial Intelligence Center. Now, where the FSCA fits in, where the Financial Intelligence Center fits in, is what we want to unpack. But perhaps it's best if we start with a definition. So, Mo, what is the definition of crypto assets?
No, thank you, Michele. And I think a very important place to start with. Importantly, I think we need to note that the decision to declare crypto assets as a financial services product or financial product was declared on the 19th of October 2019. In particular, we published a few documents in this regard. General Notice 1350 of 2022, and then our policy documents supporting the declaration of crypto assets as a financial product under the FIC Act, our Communication 30 of 2022, and importantly, the definition itself. Crypto asset means a digital representation of value that is not issued by a central bank, but is capable of being traded, transferred, or stored electronically by natural and legal persons for the purpose of payment, investment, and other forms of utility. It applies cryptographic techniques and uses distributed ledger technologies. So, Michele, can you tell the viewers more about the regulatory framework for crypto assets from a phase perspective?
Yes, well, that is certainly going back. It takes me back to the years I started at previously the FSB, now the FSCA. Phase was my home ground. So basically, when there's a big change like this and bringing a new sector into the regulatory framework, this is not the kind of decision that's made overnight. So a lot of work had to go into this process until we had made the final declaration. So just for background, the FSCA back in 2020 published the draft declaration of crypto assets as a financial product. And that was really to get more insights from the sector itself. Clearly, as you've mentioned, with some of the documents that was published, the FSCA had set out there in the rapid growth in interest in the use of crypto assets. There was an exponential increase both in the use of, and then obviously concerns with regards to risks related to the significant increase as it unfolds, like we see in scams and other fraudulent activities. So the FSCA looked at what possible established framework could be used in anticipation of the COFI bill. What could we do in the meantime? So the FACE Act was really looked at in terms of could it provide sufficiently to include crypto assets as a financial product, and then have institutions who render financial services in respect of crypto assets then become authorized as financial services providers. Like I said, there was a lot of work that went into this process, and after the draft declaration was published, there were some parallel processes that took place, where the FSCA considered obviously the comments that was received on the draft declaration. There was an assessment of the current regulatory and licensing framework in the FICA Act, and there was also a survey that the FSCA issued through a request for information. With all that work done, about 2 years later, 19 October, like you said, the final declaration was published. And the declaration has the effect now that any person who, very importantly, in line with the FICA Act, as a regular feature of business of such person renders the financial service in relation to crypto assets, now a financial product, so that they must either be authorized under Section 8 of the FICA Act. The FICA Act, for the benefit of our viewers, is the Financial Advisory and Intermediary Services Act. So they have to be authorized under Section 8 of the FICA Act, and if they do not want their own license, they can be registered as a representative of an authorized FSP in terms of Section 13 of the FICA Act. And then, of course, the FICA Act being primary law, as per usual, there's also subordinate legislation such as codes of conduct and certain fit and proper requirements. What is important is if a person then renders a financial service in respect of a financial product as a regular feature of business and they are not authorized under the FICA Act, they in fact contravene the FICA Act as a financial sector law, and that is actually, it places the person in a position to, if they are found guilty, to be subject to a prison sentence or quite a hefty fine. So very important here, the FICA Act essentially cannot be breached. You cannot render financial services without being authorized. With the inclusion of the crypto asset service providers in the regulatory framework under the FICA legislation, again, in practice didn't happen overnight, and provision had to be made for certain transitional arrangements to make sure that the FSCA has the capacity and the systems to process license applications and to also give crypto asset service providers the benefit of having some time to align themselves to the requirements of the FICA Act. So that, in a nutshell, brings us just in summary to the fact that the FICA Act is largely enabling. As I said, there is certain other subordinate legislation that applies, but the FICA Act really provides the framework for licensing, as I said, registration of representatives, and then other obligations under the FICA Act as it relates to approval and appointing of compliance officers, for example, specific in the FICA environment, and other duties like maintenance of records, audit and accounting requirements. It is important that persons that apply to the FSCA under the FICA Act for a license must do so in the prescribed form and manner, and the FSCA has published the relevant forms on its website. And to know that when the application is made, the requirements has to be met as it relates to character qualities of honesty and integrity, competence, financial soundness, operational ability, and the like. But those are the kind of things that is being assessed when an application is received. Essentially, when we speak about crypto asset financial service providers, our viewers need to understand that they are subject to compliance with the FICA Act itself, the license forms as prescribed and as may be amended from time to time, because these forms are also individually used for profile change requests. Importantly, the General Code of Conduct and the fit and proper requirements. There has also, of course, been certain exemptions. Some of them were only temporary. So our CASP viewers need to make sure that if an exemption expired, that a certain requirement has now become applicable to them if they were previously exempted. We also cannot forget that the FSCA gets its mandate from the Financial Sector Regulation Act that really deals with supporting the efficiency and integrity of financial markets, very importantly, protecting financial customers, and support financial stability. The FSCA is also designated as a supervisory body in terms of the Financial Intelligence Center Act. So where we are responsible for market entry requirements, we want to make sure our viewers are aware of the fact that we cannot, as a supervisor and a regulator, allow institutions to be included in the regulatory framework if they are owned by people who are criminals. So for market entry purposes, rather, very importantly, we do have specific checks that we do as we verify qualifications, experience, and the like. We also have independent criminal conviction checks that are conducted on behalf of the FSCA by Management Integrity Evaluation. And in a nutshell, really, this is just to alert you that you may be contacted by MIE, Management Integrity Evaluation, to submit yourself to a specific zone or branch they have for biometrics and to do the criminal conviction check. And that is really to safeguard, again, like we say, in support of the Financial Regulation Act, the integrity of the system and financial stability, and also to protect financial customers. Where we go, Mo, through the presentation, I would like to also just highlight, we do intend to publish the slides in PDF, and we thought it would be valuable to create or insert links to all the major pieces of legislation and guidance notes we'll be referring to. So this will make it easier for our viewers when they want to watch these webinars and look at the slides themselves to just follow a little bit better. That was now a mouthful about the FIC Act. What has happened in the space of the Financial Intelligence Center Act? What developments has there been that actually speaks to our crypto asset service providers?
No, thank you, Michele. And I think these developments are certainly key, especially when we have a look at our FATF standards that have been placed on South Africa. Everyone is aware of the grey listing and the impacts of mutual evaluations that have been had on South Africa and some of the findings that we've had there. So importantly, the FIC has brought in a few changes. This was released in terms of a media release on the 30th of November 2022. I think the major changes, Michele, is the FIC has increased the scope of Schedule 1 accountable institutions. Importantly, this broadened scope now includes, amongst others, crypto asset service providers. And this was in line with the FATF sort of mutual evaluation, which identified weaknesses in terms of having accountable institutions providing crypto asset services and not being encapsulated within the definition of accountable institution. Importantly for us, Michele, is that a crypto asset service provider, since the coming in of the FACE Act and the declaration of crypto assets as a financial product, is now we've got two items which CASPs can fall under in terms of Schedule 1. Firstly, item 12, which applies to crypto asset service providers who are authorized as financial service providers under the FACE Act. And secondly, item 22. These apply to any person who carries on the business of one or more of the following activities or operations on behalf of the client. And these 5 activities, Michele, are firstly, exchanging a crypto asset for a fiat currency or vice versa. Secondly, exchanging one form of crypto asset for another. Third, conducting a transaction that transfers a crypto asset from one crypto asset address or account to another. Also including safekeeping or administration of a crypto asset or an instrument enabling control over a crypto asset. And lastly, participation in and provision of financial services related to an issuer's offer or sale of a crypto asset. So it's key for our crypto asset accountable institutions to take note of the item 22 definition as well as the item 12 definition. The reason for this, viewers, is you would note that in terms of supervision of crypto asset service providers, in terms of the FIC Act, the supervision responsibility rests with the FSCA in terms of item 12 of Schedule 1 to the FIC Act, and for item 22, the supervisory responsibility rests with the FIC. This clearly creates a role of dual FIC Act supervision, underpinned by the powers afforded to it in terms of the FIC Act, read with, amongst others, the MOU between the FSCA and the FIC. Thanks, Michele. I think 2 of the main amendments that came to the FIC Act was firstly in 2017, and this essentially moved us away from the rules-based approach towards a risk-based approach. Essentially, what this meant for our accountable institutions is you are now provided with discretion and flexibility, subject to the foundation of understanding of your money laundering, terror financing, and proliferation financing risks, as well as mitigating such risks. These amendments were then supplemented by various guidance products which have been issued by the FIC, and encourage all of our accountable institutions to have a look at these guidance products. It will assist greatly in complying in terms of the risk-based approach. The second major amendment is on 22 December 2022. And this, as we know, was a result of the technical compliance deficiencies that were identified during our 2019 FATF mutual evaluation. These amendments have brought about the inclusion, as we indicated, of Schedule 1 in terms of crypto assets being declared an accountable institution, as well as various other provisions relating to the technical deficiencies that we've identified. Thanks, Michele.
Yes, thank you, Mo. With a bit of background now in the bag on the regulatory framework, definitely one of the most important obligations that our crypto asset service providers being designated as accountable institutions have to comply with are the registration obligation. Now, this registration, for the benefit of our viewers, it is a legal requirement for accountable institutions. And Mo has mentioned that there has been some schedule amendments, and the schedules of the FIC Act really has to be read with the Act itself. And in terms of the items in Schedule 1, institutions have to then register under the particular schedule item. So where accountable institutions form part of a group or a corporate vehicle, they have to register individually, regardless of whether it's a separate corporate vehicle or a division that would qualify as an accountable institution as a result of the business it conducts. But in some instances, then clearly, as you have highlighted, it might be that an institution has to register under more than one schedule item, which is in this case, like you mentioned, for crypto asset service providers, then item 12, where the crypto asset service provider is authorized as a financial services provider, and then similarly under item 22 of Schedule 1. So the accountable institutions compliance officers. And I just want to stress here that there shouldn't be a confusion between FICA Act required and approved compliance officers. Do not confuse that with the compliance officer in terms of the FIC Act. And we'll deal with that distinction probably a bit more when we speak to governance later. But the compliance officer of an accountable institution must essentially register the CASP then with the FIC. And this person is very specifically appointed in terms of sections 42A and subsections 2, 3, and 4 of the FIC Act. Where the institution is a sole proprietor, it really means that the person exercising the highest level of authority can assume that role of the compliance officer, and then that duty is on that person to register him or herself as the compliance officer. So the duty of the compliance officer really is to ensure that the information held on record with the Financial Intelligence Center is accurate and up to date. This is very important because this is also how or who the FIC will communicate with when there's engagement. And then it's also the compliance officer's responsibility to approve any subsequent users that's added to the profile. And that tells us that there has to be controls. It can't be every Tom, Dick, and Harry that can be a user. The money laundering reporting officer is then such a user appointed by the compliance officer and assists in the reporting fulfillment of the reporting obligations of the CASP to the FIC. As mentioned by you, and not to repeat, item 12 is specifically there for financial services providers. All of them, it includes crypto asset service providers, with the only exclusion where the financial service provider only renders financial services products and advice in terms of non-life insurance and health service benefits in terms of the Medical Schemes Act. You've mentioned, Mo, already item 22, how that is described in Schedule 1 to the FIC Act, and where the crypto asset then means a digital representation of perceived value that can be traded or transferred electronically within the community of users of the internet who consider it as a medium of exchange and the like. So with that being said, Mo, what are the requirements that relate to the registration of branches of crypto asset service providers? And I'm sure our viewers would be interested to know a little bit more about how the registration on the FIC's Go AML system actually works. I'm handing over to you.
Thank you, Michele. And I think an important question as well, considering the importance or legal obligation to register with the FIC. So crypto asset service providers must register per license issued. And we've identified previously, Michele, in terms of item 22, what that would require. But the nature of crypto asset business allows for this accountable institutions to be in a position to have virtual, centralized oversight over their client transactions at all times. It is therefore not required that each individual branch register on its own. Registration with the FIC is web-based. This process involves the submission of required information of an accountable institution into mandatory fields on the FIC's registration and reporting platform called Go AML. And I'm sure most of our viewers are aware of the Go AML system. Institutions need to ensure that they populate the required fields on both the institution and user forms during the registration process. The registration process takes approximately 30 minutes to complete. All registration information submitted to the FIC will be verified, and the finalization of such requests takes approximately 5 working days. Each accountable institution will be allocated a unique registration reference number once registration is completed successfully. An accountable institution can inform the FIC to deregister the entity in instances where the entity has ceased conducting the business of an accountable institution. An accountable institution whose name is on the registration register needs to advise the FIC in writing should they have changed ownership of the business. And I think this is a key point. The FIC or applicable supervisory body may, in terms of section 61A and 45C sub 1 read with 45C sub 3 of the FIC Act, imposes an administrative sanction on any accountable institution for failure to comply with any provision of the FIC Act, such as the failure to register with the FIC. Accountable institutions are reminded of their obligation to ensure that all registration information with the FIC is correct and up to date. Registration with the FIC enables accountable institutions to file relevant reports to the FIC on the GoML system and to receive and respond to requests from the FIC in terms of sections 27 and 32 of the FIC Act. Reference here is made to PCC 5D, and I'd urge all our accountable institutions to have a look at that on the FIC website. Importantly, there's two directives that bear reference. Directive 1 of 2013, which requires all registered accountable institutions to update their details by submitting the relevant information to the FIC electronically by means of the internet-based reporting portal referred to in Regulation 27A, Sub 4 of the Money Laundering and Terrorist Financing Control Regulations. Refer to Directive 1 on the FIC website in this regard. Directive 2 of 2014 states that the login credentials obtained from the FIC during the registration process for utilizing the internet-based reporting portal referred to in Regulations 22 Sub 1A and 27A Sub 4 of the regulations may only be used by the person to whom such credentials has been allocated. Importantly, no other person may use the login credentials for purposes of reporting to the FIC. If the person whose the credentials were issued to no longer holds the position he or she has held at the time of registration, the accountable institution must ensure that new login credentials are obtained using the internet-based reporting portal. And this has reference in terms of Directive 2 of 2014, which you can view on the FIC website. So, Michele, are there any prevalent inspection observations that you can share with our viewers in this regard?
Yes, importantly, Mo, like we said, registration is kind of your baseline foundational obligation. If you are not registered, you cannot file reports with the FIC, then you're going to breach your reporting obligations. If your registration details are not up to date, or you have lots of people with uncontrolled access to the portal on your behalf, it poses a myriad of risks. So registration really is critical. We do see still there are some failures to register with the FIC. Sometimes the registration is done, but it is not in terms of the correct item. And sometimes we also see that login details are shared. Like you said, that really is prohibited. There's a directive issued in that regard, and for good reason. Failing to update the details on the GoAML system is also unfortunately observed in certain instances. And this means that when the Financial Intelligence Center wants to engage and reach out to a particular accountable institution for purpose of our discussion today, a crypto asset service provider, and the details are not correct, that request is not going to reach the institution. It's going to go to the wrong person who's maybe since left the employ of the institution. And that means that there won't be a response to the requests for information then from the FIC. And that provides for delays or even completely then a lack of intelligence that the FIC relies on. So let's make sure, our crypto asset service providers, that you are registered under the correct item number, your details are up to date. If there are significant changes to contact person, contact details, the name of your institution, if that's changed, make sure it's up to date. And obviously, visit the FIC website regularly, frequently. Go look at GoAML, go look at your dashboard, and see if there's any reason for you to action the request. So we have dealt with Mo with the definition of crypto asset service, crypto assets as a financial product, the regulatory framework in terms of the Financial Advisor and Intermediary Services Act, the fact that the Financial Intelligence Center Act is critical and key because that is through the FIC Act that crypto asset service providers have been designated accountable institutions, and there's very specific obligations that apply to them. The first that we've dealt with now in part 1 being registration. But there are quite a few other obligations that we want to share with our viewers, and we are going to do so in parts 2 to 5. And in part 2, we look forward to see you again, and we would like to discuss with you very important topics as it relates to money laundering, terror financing, proliferation financing, business risk assessment, your obligation to develop a risk management and compliance program, and then governance requirements, which also extends to training. So we look forward to meet you again in part 2 as we conclude on part 1, and we hope you enjoyed this session.